Is June 2nd. I cannot believe it. It's a new trading month. And we're here at MarketStream.live taking a look at all of the Asian markets. And it has been one heck of a week. But what had been driving the Asian markets overnight is the crude contract. Just taking a look at the light sweet crude contract, the CL contract here in the States, it's trading back down at 47. That means that we're looking at 46.44 as a level that's going to be potentially tested now that we've had a successful break of not only the 20, the 50, and the 200-day moving averages, but we're now this little uptrend right here. We're starting to see a breakdown here technically. So when you see this kind of action, you can clearly see that the bears are in control. Why? Well, this is going to be what's discussed. The Paris Accord, the U.S. pulling out of it. Climate control is something that's real, but a lot of these pieces of the Paris Accord, basically what we're not going to be doing is we're not going to be reporting all of this data that has to be reported anyways to other governments. So on the surface, it has put some pressure on crude because here in the States, if we're pulling out of the Paris Accord and some of those restrictions, that could mean that U.S. rig counts could be going up and we could be pumping more oil here. That's putting a lot of pressure across the globe, and we're seeing it now represented in Japan from the perspective on the yen. This means that if we start to have the Japanese basically are exporting cars and vehicles and other products that use petroleum or utilize petroleum in terms of cars. The Japanese Nikkei popped. Not only did it pop last night, finished up 1.6%, it finished the week up over 2.5%. This is a huge move, and look at where it battled, that 20-day moving average. Folks, this is why I use this stuff, not because it's a magic recipe for buying and selling. It gives me context. It tells me who's in control. And at this juncture, this pullback didn't scare me in Japan only because the yen stayed weak. Great. There's a fundamental piece. They had great PMIs this week. They came out very strong. Those purchasing managers index, that's a forecast for future growth by purchasing managers at corporations. They came in very strong. So that means that they're seeing potential growth in the near future and going forward. So we saw strong autos, especially after the U.S. pulled out of the Paris Accord, and we saw North American sales for autos here just really off the charts, solid for the names of like Honda, Toyota, and so forth. So with this weakness in the Japanese yen, with the strength in the auto market in Japan, that has given the Japanese markets the catalyst that they needed. Now, where we haven't seen a lot of catalysts has been China. There's still plenty of uncertainty on what's going on with China. What really left a lot of traders with the Shanghai Composite finishing just basically a flat line up a couple points, finished the week down 0.2%. So there's not a lot of huge issue here, except for the fact that the bears, they're digging in their heels right now. They're not letting the Chinese markets get to the upside. And that makes sense. We saw PMIs that came out from China, one overnight a couple days ago that was at 53.1, which is growth. Anything over 50 on a PMI is going to be a growth indication. But then we saw the Caxian PMI come out the next following morning or overnight at the end of the session, came out at 49.3. Now, obviously, Chinese data you always have to take with a grain of salt. But clearly from just this picture, if anyone who didn't know anything about the markets and you just explained to them that this is the market going down, it's staying flat, and these are moving averages of 20, 50, and 200 days, and basically the market's been underneath for the majority of this time for over the last month and a half, who would they think would be in controls? The buyers or the sellers? I bet you anyone would say the sellers are. So we're going to watch this one very closely as we have this mixed data coming out of China and uncertainty on whether or not the government really is going to clamp down on lending standards as well as on trading leverage. And that's something that a lot of traders and investors are watching very closely. Now, Hong Kong, on the other hand, has been moving to the upside nicely. Smooth. You can see it's just been gliding up and trading right along the 20 and 50-day moving average. Matter of fact, above the 20-day. So you can clearly see that the challenge was there and they took off. Now, Hong Kong, a lot of the mainland money is moving into the Hong Kong markets. It's cycling into where there's growth. You're seeing autos, you're seeing finance, you're seeing property names, all moving to the upside in Hong Kong, as well as gaming. So very interesting action in Hong Kong, but we're going to have to wait to see what's the next catalyst. Now, the People's Bank of China did infuse some capital into the Shanghai Composite, which is always something that basically it's a backstop, their proverbial put for you options traders out there. But we'll see how Hong Kong continues to grind. They're going to need another catalyst, and we'll see what that catalyst is in the upcoming weeks. And then finally, India. India has been skyrocketing, up 2.7% for the week. Hong Kong finished, by the way, up 1.1% for the week as well. You continue to see growth names, financial names moving to the upside in India. Just absolutely an impressive strength there. What's also notable, too, that I wanted to bring up about the Nikkei, the Nikkei finished above 20,000 for the first time since November of 2015. We're seeing some really explosive moves to the upside, which basically gives you a little bit of pause to make sure that when you're looking at these kind of moves, is it based on strong volume, strong fundamentals, strong technicals, and then you could start making better transparent decisions. All right, folks, that's it for the Overnight Action Report with Asia. We're going to be on at 8:15 Eastern Time. We're going to be talking about everything in Europe. See you then.